From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Good afternoon. David Gura in for Joe Matthew and Kaylee Lyons on Balance of Power on Bloomberg Radio and Bloomberg Television. It's a busy 1 o'clock hour here in Washington and on Wall Street. Let me walk you through it. My colleague Carol Massar, of course, the co-host of Business Week Daily out in California. She is there for the Milken Global Conference and scheduled to sit down with some of the biggest names in commercial real estate, including Barry Sternlicht. We're going to get to that panel as soon as it begins, give you a sense of what the conversation is like among some of the biggest investors in this country and around the world about the prospects for real estate going forward here. And a busy afternoon for the President of the United States as well. The President is in the White House teasing an event, a sports announcement in the Oval Office. And we first heard from Axios this morning that has to do with the National Football League. He's expected to be there with the commissioner of the NFL, Roger Goodell. If past is prologue, often there's a Q&A that opens up after announcements like these, a wide-ranging Q&A, and we will bring you some of that as it gets underway. And given all the news the President made over the course of the weekend on Air Force One and on Meet the Press, likely that would touch on the economy as well. We're going to have the governor of the state of New Mexico with me here on set in Washington as well. But I want to start at the White House with my colleague Tyler Kendall, our Washington correspondent here at Bloomberg Television. We just heard from Scott Bessent, the Treasury Secretary at that Milken Global Conference, Tyler, talking about this notion of American exceptionalism. And I'm curious what stood out to you from his comments, what he had to say to that gathering of investors.
Yeah, hey, David. Well, it appeared that the Treasury Secretary was really trying to push forward what this White House is saying is their three-pronged approach when it comes to the economy, particularly when it comes to tariffs, taxes, and deregulation. We know that the administration would like to really focus more on that tax part as they push Congress to get through that reconciliation package. But as you're about to hear, he made the case that these three things combined really do make for a good environment when it comes to investing global capital.
America is the Schelling point of global finance. We have the world's reserve currency and the deepest and most liquid capital markets and the strongest property rights. For these reasons, the United States is the premier destination for international capital, and the administration's goal is to make it even more appealing for investors like you.
Concerns about the international appeal of dollar-based assets really did materialize, as you well know, last month amid the stock market turmoil, amid so much tariff uncertainty. And Bessent actually went on there to say that tariff negotiations often aren't a, quote, pleasant process, but that there is an end game in sight. We know this administration is perhaps suggesting that we could see some movement when it comes to framework agreements as soon as this week. Of course, we aren't expecting those full-fledged deals, which could take months to really hammer out, but perhaps more something like a letter of an intent to outline frameworks of some sort of agreements when it comes to these trading partners. And we are closely watching those countries that the administration says that they are prioritizing, those countries that are geographically close to China, like Japan, South Korea, and India. We know some of the terms perhaps that could be included, including that the U.S. would like to see these countries really boost their imports when it comes to some U.S. products, particularly U.S. LNG and U.S. agricultural products. And David, I will mention two quick updates from today already. Already, people familiar are telling Bloomberg News that India is prepared to lower tariffs to zero on a reciprocal basis for steel, autos, and pharmaceuticals. And then we actually heard from Japan's finance minister, who confirmed that the sale of U.S. treasuries will not be involved in any deal. That was one development that we've been tracking.
Tyler, thank you very much. Tyler Kendall at the White House with that update on what was happening, what was being said at the Milken Global Conference, which is to where we return now as Carol Massar, my colleague at Bloomberg TV and Radio, presides over a panel on commercial real estate with Deborah Carafa, the CEO of Ventus, Justin Kennedy of 3650 Capital, Andrew Smith of Bayview Asset Management, David Steinbach of Hines, and Barry Sternlicht of Starwood Capital Group. Let's take a listen to what they're discussing there in Beverly Hills, California.
Orders, but they're no longer here either. So we shouldn't take it for granted where we are. And we have a 37 trillion deficit on its way to 50 trillion. And that's going to require funding from the rest of the world. So don't be so complacent on our position in the world. The British had a pretty good run, sort of the Holy Roman Empire. You know, we had 100 years. And honestly, I look back, and I talk about this sometimes, if we don't fix our education system, the destiny of the United States is not good. And I saw this morning Abu Dhabi's introduced AI into schools. we have to actually get with the program. We can't rely on historic innovations that also came from immigrants that run all our great tech countries that we want in the country today. So you got to look in the future, not in the past. And I think we have a lot of challenges. We should win.
You know, there's something, and I had promised these guys I wasn't going to start macro, but the one thing that I think is interesting, and forgive me, and I can't remember who's said this, but it's Donald Trump being the right question, he's just not the right answer. And Deborah, you're nodding.
Yes, I would point out and agree with a lot of what Barry's saying, but if you think about our global leadership position in biomedical research, for example, we're the envy of the world, there's almost $1 trillion in spend, and whatever the question is, cutting fundamental research that's going to cure Alzheimer's and deal with chronic conditions is essential and has a huge multiplier effect on the economy. So we have to take care not to destroy the advantages that we do have and also create new ones, as Barry's talking about with education.
Are tariffs? Oh, go ahead, Andrew.
Yeah, I think part of what we're saying in agreeing with that is that there's just a lot of noise that we don't know how to cut through, that the communication globally on what we're doing is not really there. So I think we all believe that the ultimate goals are ones that get us to the right place, but how many people do we offend along the way, and can we kind of reel it in enough to make a difference?
Well, you live in a glass house. You have a $37 trillion deficit. The deficit will easily pass $2 trillion this year. So, I mean, you have to recognize that even in the Trump 2019 economy before the pandemic, he ran a $1 trillion deficit with a 3.8% unemployment rate. We were basically, as one of the money managers said, we were on sugar highs. You know, we were not fiscally responsible. And somewhere in here, we're going to have to, we can have a 20-year plan. It doesn't have to be overnight, but we have to have a plan to have global confidence in what we're doing. And, you know, it's both the revenue and the expense side. We got to get the revenues. So it's not a foregone conclusion. We should win. I mean, we are by far the best at most everything we do here. And people envy this country. We have to continue to want them to envy. And the best and the brightest have to come here. They can't go to England. They can't go to Toronto. And we have to let them in. So we want all these fabulous people here.
Just one question on tariffs. So is tariffs then the right strategy? Is it right, this pushback? I'm not saying the back and forth, but in general of saying terms have to be fairer.
I thought we weren't doing politics.
Well, sorry.
I mean,
I'm going to get myself in serious trouble.
Okay, so you be quiet for a second.
I agree with 100%. Everything.
I do think deals will get cut. It's going to be time. It's probably take more time than we probably appreciate. We're going to have to live with this in-between period of a lot of just uncertainties that businesses are pulling back to wait to see what plays out.
Right.
But I think even on the other side of this, it does feel like there will be more friction costs in the global business of trade. After you squeeze all the toothpaste out of the tube, it's really hard to put it all back in. Mm-hmm. And so I think we are going to be living in a world of more friction costs. And I think that, though, to me, is a broader theme of deglobalization that we've been watching for several years now. This is simply deglobalization playing out. And this is going to be one of many things that investors are going to have to think about and navigate.
All right. Politics aside, I've heard. I got the message. Well, let me just ask you guys, are you optimistic in terms of when it comes to real estate investing? Show of hands. That's kind of, all right. Those who don't think it's so great, show of hands. All right, so a little bit more optimistic.
Undecided.
You're a credit guy.
What?
There's a reason I'm a credit guy.
He's a credit guy.
Yeah.
Are you?
Do we get to vote?
Yeah. Are you optimistic?
Yeah, actually.
Show of hands.
For real estate.
Yeah.
Yeah. You guys
Definitely.
are pretty up. Are you optimistic?
Mixed.
I'll be the outlier here.
You're going to be the out.
Mixed.
Well, that's opportunity for you.
Sorry.
Is that opportunity?
We think so, but it's at the same time a risk factor for the markets. We see a situation where real estate has really changed fundamentally across a number of very important, let's call it, hurdles that people have to think about in terms of their investment strategies in the current environment. The dispersion of returns, particularly looking at the commodity part of the asset class, And maybe people up here may be in a little bit different place relative to specialization in Deborah's book and the, let's call it A++ targeting at Hines. As we look at the market, these types of strategies have been very successful. At the same time, the commodity part of the market has suffered a huge shift in demand. And demand.
What asset class are you referring to? All?
Industrial has had a shift in demand to the positive side. Multifamily is kind of a more complex picture that's really regionally guided. But both retail was really both retail and office where we first saw, let's call it, the impacts of technology changing, let's call it the core utility of properties, that these are markets where we're been through 15 years of re-equilibration in retail, and we're just at the start of looking for equilibrium in the office markets on the commodity part of the asset class. You know, just a quarter mile away here on Avenue of the Stars, the highest rents, the highest occupancy ever seen. Same was true in Park Avenue in New York, yet downtown Los Angeles is having essentially an existential moment in terms of, are tenants able to pay rents that, or are rents able to be achieved that are at all accretive at any price for those assets. 1 year of rent on Century City buys you a building in downtown Los Angeles. And this is a very new place for the markets, and this is what we're concerned about. And then, the questions that this poses for, let's call it, traditional real estate strategies, we think are pretty significant.
So lots of dispersion. David, you want to?
Well, yeah, I was going to say, I also think, what's happening in the market is this dispersion, but what's compounding that, and I think investors need to be thinking about this in terms of the next couple of years, is new supply has really been cut off, right? Interest rates moved 500 basis points around the world, and the development does not pencil anymore. And so many projects around the world have been now stopped for now. And that, people forget how long it takes to build things. You just don't throw these things up. I mean, there's the planning, there's the consent, there's all the things that have to happen locally. Then you have to actually do the construction. And so I think that what we're gonna see in this environment is right now is certainly a time to buy, not build. And there's some great opportunities on the buy side. But what people are not watching is the fact that we're not building anything. And that will drive even more rent growth for the best in class and will become a big opportunity. So a thing I think investors miss, and this is a common, you just see this through cycles, is the market is now in a buy phase, and which is great. I think it's a great opportunity. But they're going to miss these early development signals that will start emerging because the best margins in development are early in the cycle, and they diminish as the cycle wears on. So that's this turning point. That we're not there yet, but I think it will be coming in the next 18 months, say. I mean,
I think most investors know the supply picture for real estate. I mean, if you're sophisticated, you know the multi-stack is going to drop 60%, the industrial stack's down 70%. Nobody in the right mind would build an office building unless it's a build-to-suit for a tenant today. Hotels are still trying to build, but cost of capital is so enormous that they're struggling to make the numbers work. The lending markets, which Justin is in, and I think Andrew also, I mean, they'll lend us money for office buildings at 400 or 500 over. We'll say, no, thank you. It's higher than, it's massive negative leverage on the debt side. But it is one of the most important premises of opportunistic investing in real estate is replacement cost. And you can buy most everything pretty cheap here, and with the land at zero. And it's just a question of what it's going to cost to keep the building, whatever it is, tenanted. But it is interesting to me, I started this new hotel brand, One Hotels in Baccarat, and we're not a commodity. And because of that, we're like 150 to 170% of fair market share in every market we operate, and we're in like 15 or 20 markets now. It's happening in real estate too. People are running office buildings better. She's running her senior housing and assisted living and senior stuff better. Commoditization is leaving the table. And you have to do something better. And there's some crazy office building in New York that I haven't visited yet that is downtown, and it's like a theater. My kids go to this office building. I don't know what they're doing, but I actually know what they did. They went to get some kind of treatment, like massage or something. But it's in an office building, and the guys turn it into Disney World. So I think I'm on the board of Estee Lauder. They've had all these brands. They have 25 brands: Le Labo, Joe Malone, and Estee Lauder, Bobbi Brown, Aveda, and The Ordinary, which is now a multi-billion-dollar brand. They call these new entrants that you get on your Instagram phone piranhas, because I get the thing. Take my spots away, give me hair, I order it, doesn't work, but I order it anyway.
It's hard.
So
that business.
It is really, really interesting today how you take real estate and make it not a commodity. And it's upping the game on all of the operators in the business to figure out how to do in your asset class to steal market share. Because there's plenty of occupancy. You just have to be different and unique and appeal to I built an office building in Miami during the pandemic. I leased it without a leasing broker.
Yeah.
100% occupancy. I could sell everything. And the rents, the first lease I wrote was $55 a foot. And 8 months later, the last lease was $125 a foot. I didn't even know how to price it because we hit the market exactly right. We had the right product in a market, small floor plates for high net worth families. And it's a joke. So if you get it right, you can add a lot of value. You can make a lot of money.
What you're saying, Barry, is that you're using.
That was Barry Sternlicht of the Starwood Capital Group. They're at a panel at the Milken Global Conference in California at the Beverly Hilton. Our Carol Masser moderating that panel on commercial real estate. If you want to continue following it, you can at Live Go on the terminal. We'll continue to bring you a lot more from that conference over the course of the day. Let's check in with Amy Morris here in Washington for Bloomberg Business Flash. Check on the markets. Amy.
All right, thank you, David. Rite Aid intends to file bankruptcy less than a year after completing an earlier restructuring. The company is not able to secure additional capital from lenders and plans to cut jobs at its corporate offices in Pennsylvania. A Chapter 11 filing would mark Rite Aid's second bankruptcy in less than 3 years following its first filing in October of 2023. Skechers is going private in a deal with 3G Capital. 3G ready to pay $63 per share. Shareholders have the option to get $57 per share in cash and one LLC unit in a newly formed private company that will be Skechers' parent company. The transaction is expected to close in the third quarter of this year. Shares of Skechers now 25% higher. Now, as for the markets, Chris Harvey at Wells Fargo is hopeful investors are getting more clarity now from the Trump administration.
I think we're past peak uncertainty. And what we do is we look at it this way. He went very hard very early. In order to get that pressure back, I think you'd have to put us into recession. I don't think this administration wants to go into recession because what it would mean.
And we do check markets for you all day long here at Bloomberg. The S&P 500 down 0.3%, NASDAQ down 0.4%. The Dow is higher now, about 0.1%. The 10-year Treasury yield at 4.35% and the 2-year yield at 3.85%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back now to Balance of Power with David Gura.
Amy, thank you very much. David Gura in for Joe Matthew and Kayleigh Lyons here on this Monday, and we were hearing a lot about immigration in the panel that just wrapped up there. Have an opportunity to talk a bit more about that now, some other major issues as well, with Michelle Lujan Grisham, the 32nd governor of the state of New Mexico, who kind enough to join me here in Washington, D.C. Let me start with healthcare, and I imagine you being here in Washington have it's an ear to the ground when it comes to the conversations that are taking place on Capitol Hill about proposed cuts to Medicaid, which I know is crucially important to a lot of folks in New Mexico. If that were to happen, and they're talking about cuts of $800 billion, close to $1 trillion, what would it mean for folks in your state?
Well, it's devastating. I mean, we're not talking enough about what it really does. There's been a lot of present company excluded platitudes about, oh, we're just trying to get at right-sizing a lot of these federal investments. More than 400 rural hospitals are already barely surviving. 46%, frankly, of all rural hospitals barely make it under the current system with Medicare, Medicaid, veterans payment investments in the private market. You take out $880 billion, those hospitals close. All of those outcomes, right? Maternal health, infant mortality, all the things that we need to do better as a country all fall apart. Less access to obstetrics. So in a state that's trying to build healthcare access, this is bad, terrible, the worst. Two more quick things.
Sure.
Every governor in the National Governors Association signed a resolution saying, we'll negotiate with you individually about what we think is best for our states and Medicaid, and you can incentivize those negotiations, but don't just indiscriminately cut funds. So every governor, bipartisan, said this is exactly what our residents and our states don't want. And two, you know what this really is like? It's like having the federal firefighter folks come into your state, and I would know a thing or two about that, in a wildfire, bringing flamethrowers and wind machines. This is not helpful. How about if Congress works on reducing health care costs, and we could do that by restoring the ability to negotiate on drug prices?
Do you find that what you're saying is getting through on Capitol Hill, you and other Democratic governors, or is it?
Well, clearly not, because what we're seeing so far in the proposed resolution is that the only way to get where they want to go in budget cuts is to go after Medicaid indiscriminately. And frankly, they wouldn't have to do that if they had a health care plan. And Republicans in Congress have never had, as far as I know, a health care plan. And I think Americans should be really disappointed. And I think, quite frankly, they need to be weighing in with their governors and their elected members of Congress. Costs will go up. Small businesses will not be able to afford to provide coverage to their employees. No access means you're out more sick days. Everything that really creates more instability, this is what we're doing. And of course, healthcare is a huge employer. That means fewer people with jobs. None of it makes sense to me.
I want to ask you about immigration. Of course, you preside over a border state, and we hear a lot from the president about the successes he sees in terms of boosting security on the border. I'm curious how that's reverberating across New Mexico. So if you look at people who are here legally, for instance, they look at the ICE raids that are taking place, the degree to which the kind of security mechanism of the United States has been brought to bear here. What's the effect of that had on kind of the zeitgeist in the state among immigrants in New Mexico?
Well, there's a lot of fear and uncertainty in New Mexico, and that even bore out many of the debates in my just ended legislative session. It's our policy session. We've got 48 folks who were sort of the subject of that national kind of coordinated set of raids by ICE trying to utilize local police, and even some Border Patrol folks who shouldn't be in the interior. If you're looking at border security, here's an idea. Have them at the border. There's a lot of angst. New Mexicans, and I would add my own direct opinion and voice here. My job is to represent effectively my state and also solve problems. We agree that bad actors, frankly, whether you're from here or not, we would welcome the federal government to do more in drug interdiction, to do more about stopping guns, drugs, and human trafficking at the border and anywhere else. What doesn't help us at all is not focusing on bad actors, but going after children and their families indiscriminately at hospitals, schools, and at workplaces. That just creates fear and anger and animosity and doesn't make our country any safer, nor does it help us build an economy that works for everyone. Here's what we should do. How about after they fix healthcare with a real plan that doesn't indiscriminately cut Medicaid, maybe we should pass a border bill.
On the issue of incentives and the incentive structures that are being put in place here, Kristi Noem, the Secretary of Homeland Security, just announced if a person self-deports, uses this government app to self-deport, and it's confirmed by the country to which they go, they'll get $1,000. Does stuff like that work? I'm just curious, sort of your sense of the dialogue again around how this government is both incentivizing and kind of pushing people out of the country.
Well, I understand that work. I mean, I worked for governors, and now I am one. President set a pretty grand target for deportations that I don't think were based in fact in any context, and you got a cabinet secretaries trying to meet that. I think it is a ineffective and really gross tool to suggest that people were just here to quickly make a buck and that there's no real issue with asylum and refugee status and trying to build a safer future for your family. And it's pretty disrespectful. What we ought to be doing is stop separating families No one in America, I don't think at least, wants to see another 3-year-old in a courtroom by themselves, or American children who are separated from their country because their parents are leaving, or the opposite, they are not going with their parents or parent, and there's very little information. New Mexicans, I think, reflect where a lot of the country really is. One, if you're a bad actor, help us. I don't want any bad actors. I want no more human trafficking. I want no more drugs moving through this country from anywhere. China, Russia, Mexico, anywhere. At the border or in the mail, in a truck or by plane or by boat, we don't want them. Two, I want us to leverage and coordinate our law enforcement so that we make every community, including my state, safer. And lastly, I want a better, fair investment about immigration policy so that you can get visas on the front end and that you can work here on the back end, and it's transparent and fair and meaningful. They have the opportunity to do that. Why don't they do that instead? I think that's what Americans are really, wanting. But this is an administration, I think, that wants to politicize this issue and try to divide America.
I have a unique opportunity to ask you what that level of engagement is like with this administration. I think a lot of us saw that moment in the White House when your colleague Janet Mills of Maine stood up effectively to the president, and it was icy, and there was blowback from him. There's been a settlement with Maine more recently. Do you feel like you can be heard, that there is any kind of dialogue between you as the head of a state and this administration, or is it simply kind of irreparably divided at this point under this president?
My hope is that it's not divided. I'm actually working to get into talk to as many secretaries. Did that today. Had some good news from the Veterans Administration on a request for a waiver so that we can keep building and investing in the ways that we have been for veterans' long-term care, and we got that. We want to do drug interdiction and focused work with Homeland Security. We have a lot of emergency response issues. I need that relationship. I have a relationship with Secretary Noem from our time as governors and in Congress. And there are plenty of others, like the Secretary of Interior, Doug Burgum. And I'm working to develop a relationship in the White House. In my long career, I hope that most New Mexicans still think it's been an effective effort. I still love my state, and I'm working hard. And our economy is, I think, proof positive, and our cradle-to-career investments, bar none, best in the country. Every administration, irrespective of party, I have great support from and agreements with, and the opposite. And so it's navigating and doing what's right for your citizens. And I will tell you what my businesses are telling me. Can we land in a place that's predictable, that's fair, that doesn't feel like it's a roller coaster, because they don't expand, they don't invest when that's the situation. So my job is to create stability in every single relationship in the federal government. But I also don't tolerate, and shouldn't, anybody who goes after my state or tries to do something that hurts a New Mexican or their family. Any administration, including this one, should expect me to punch above my weight class.
Last question. We got about a minute left. You were recently in Japan and Singapore. What were those conversations like as you talked to government leaders there about the prospects for investment and economic opportunity in this country, given the uncertainty that you were just talking about?
I'm worried about tariffs. I mean, there wasn't a single meeting that didn't start with that. I was there with another governor, governor of Wyoming, and we were very clear we don't set that federal policy. We're certainly not in a position, and won't, to try to negotiate that. That's going to happen between you and the White House. But we have also, we signed saying that tariffs is, not the right for us, free trade, capitalistic set of policies that we think work best in our states. We were really clear about that. And where we really highlighted the opportunities in this administration is energy dominance, if you will, or production. The second largest oil and gas producer. We produce the cleanest barrel of oil and the cleanest liter of gas on the globe, because we set very, very clear carbon intensity, lack thereof, requirements. We have the strongest methane rules now that they've been rolled back at the federal government in the country. And guess where these countries want to go? They want to purchase the cleanest gas. Guess who has the largest gas reserve? New Mexico. So here's where I think I can find a really productive path. This administration wants to make sure that energy security around the globe runs right through the USA. I want New Mexico to be at the front of that. And frankly, Western states have been powering Western states forever, and Eastern states are going to need our energy. Solar, wind, geothermal, storage. Many states are working on small-scale nuclear fusion. That's happening in New Mexico as we speak. And absolutely, let us get LNG around the world.
Governor, nice to see you. Thank you very much. It's Michelle Lujan Grisham. Join me here in Washington, D.C. Appreciate her time on this Monday afternoon. I want to turn now to our political panel. Back with us once again, Sheehan Zaino is with us, Senior Democracy Fellow with the Center for the Study of the Presidency and Congress. John Seaton, Republican strategist and founder and CEO of Echo Canyon Consulting, here with us as well. And Jeanne, I'll turn to you first. Just your reaction to that, particularly on the notion of trade and the way that the U.S. continues to sort of look for ways forward here in light of the uncertainty that's kind of overarching so many of the economic relationships.
Yeah, I mean, the governor just speaks so eloquently and really thoughtfully about the impact of this on people on the ground, and particularly, obviously, in her state. And I do think we need to hear more of that. It was one of the first things she said to you, David, when you started asking her, is we need to hear more, whether it's the Medicaid cuts, whether it's trade, or whether it's this new deportation policy, not necessarily new, which she described as gross. When you listen to the stories of how this is impacting people on the ground, that is when people can make a real determination as to whether, in fact, the policy is one that the United States should be promoting.
John Seaton, on that same point here, you have her, of course, overseeing the government of New Mexico, other governors trying this as well. What do you make of that, the prospects for, I guess, the state level, trying to broker deals or kind of see through the maybe uncertainty that exists at the federal level, but might be clearer at the state level?
Well, I think to her point, a lot of this is the purview of the federal government. And as I've said on this program and others, a lot of this really should not be a surprise. This is what President Trump campaigned on. And I do think that whether it's immigration and getting people who really should not be in this country out of this country, whether it is taking a tougher stance on trade and tariffs to make sure that we get fair deals. This is what the president campaigned on. So I don't think there should be a huge surprise here. And I do think, once again, as I said in the previous segment, that as long as the president continues to communicate how this will long-term affect and impact and benefit American families, I think that people will come around and be supportive of his efforts.
John, let me put a version of the question I put to the governor to you, and that is, how good is the relationship, do you think, between governors of both stripes, Republican and Democrat, and this White House? What more can be done here to have more constructive conversations in the interests in states that aren't Republican?
Right, and I'm not privy to those conversations, of course, but I do think that open lines of communication are always important, and governors really are kind of CEOs of their states, and so it's extremely important that there be open lines of communication and that they go both ways. Governors should continue to communicate to the White House and administration and the various agencies what it is that they need, what it is that they're seeing on the ground, and be supportive of the efforts, even if they happen to be of a different political party. At the end of the day, people are elected to serve all of their constituents, not just one party or the other. And so would like to see as much communication and transparency as possible between state governments and the White House administration, and I hope that continues.
Jeanne, the governor and I didn't get to talk about 2026 or 2028. Her term is up in 2026, but something interesting is kind of happening in the state of New Mexico. She recently called in the National Guard to Albuquerque because of violence and crime there. Got some pushback from that, but it's kind of sharpened this distinction between or among Democrats, that there are those who favor that kind of harder line approach and those who don't. And I think it's going to kind of set the foundation for the race for her successor, at least on the Democratic side here. What do you make of that? What does the New Mexico story tell you or tell us about the way the Democratic Party moves forward here to 2026 and indeed to 2028 as well?
Yeah, and there's nothing I like more than to talk about elections, David. So thank you. We don't get enough of them since 2024 in my book. But, I think there is a real divide on the Democratic side. How do you handle issues regarding insecurity? And I think the governor is leading in the right way. There is no world in which any of us should be living insecure in our homes and worried about being victims of crime and violence. It is absolutely unacceptable. And so you have to deal with it as governor. That is her job as the executive of the state. And every other governor should follow suit. And Democrats who don't, end up with a world of hurt, both politically, but more importantly, with their constituents, because none of us deserves to live in a place where we can't feel safe. So safety, economic security, those are number one and number two, or vice versa, however you want to count them, in terms of what an executive has to do. And as they look for the next executive in New Mexico, you can bet Democrats on the ground are going to keep that in mind. We want to be safe, secure, happy, and fulfilled in our lives.
Great to speak with both of you, and I thank you for listening through that interview as well to get your reaction to it. That's Sheehan Zaino, Senior Democracy Fellow with the Center for the Study of the Presidency and Congress. John Seaton joined as founder and CEO of Echo Canyon Consulting. He is a Republican strategist on the heels of that interview that I had with Michelle Lujan Grisham, the governor of New Mexico, here in Washington for a couple of days, and just invaluable to get her perspective on the issues of immigration and health care as well, and also the future of the Democratic Party, as we were just discussing. I want to set the table once again here for what's going to unfold here over the next few minutes. My colleague Sheanne Bosick of Bloomberg Television getting ready to sit down with Jeanne Fraser, who's the CEO of Citi. She's at the Milken Global Conference in Beverly Hills, California. We are still waiting for an event at the White House as well. The President of the United States teasing a sporting-related announcement. We'll see if he takes questions afterward, and if he does, and they're wide-ranging, we will bring them to you here live. You can follow that and the goings-on at Milken at Live Go on the Bloomberg Terminal. This is Balance of Power on Bloomberg Television and Radio.
This is Balance of Power with Joe Matthew and Kaylee Lines on Bloomberg Radio and Television.
This is David Gura in for Joe Matthew and Kaylee Lines here in Washington on a busy afternoon. We're waiting for the President of the United States to speak. A couple of engagements on his agenda for the course of the afternoon. He's teasing a sporting-related one. There are some executive orders in the offing as well. We'll bring you that as soon as it happens, and you can follow it on Live Go as well. Without question, a huge event in California this week is the Milken Institute's Global Conference, a gathering of some of the biggest names on Wall Street, in banking, in finance, policymakers as well. The Treasury Secretary, Scott Bessent, was there, re-emphasizing the fact that he thinks the U.S. is the preeminent destination for global capital. Given all of that, no surprise that my friend and colleague Sheanne Bosick is there. She, of course, our lead Wall Street correspondent and the co-anchor of Open Interest on Bloomberg Television. I'm going to toss it to her with the CEO of Citi, Jeanne Fraser. Sheanne?
David, thank you so much for that introduction. Of course, I am sitting by with Jeanne Fraser. She is the CEO of Citigroup. And a lot has happened, Jeanne, since we last spoke. So much has happened. And I've got to say, on the ground here, despite all the uncertainty we've seen for the last several weeks, there's a lot of optimism from investors out here. What do you make of that type of forward look? Do you think that there's a lot to hang on to, given that we just heard from the Treasury Secretary and the pitch he's made to investors about the future of the country and investment in it?
Yeah, thank you so much for having me back again. It's great to be here and to be at Milken. Look, we're in a world where the difference between the hard data and the soft data is the greatest I've ever seen. And it's very hard for all of us to understand, to get our arms around this and what does it mean. And I think we just got to recognize that this will take some time to play out. On the one hand, we've got investors who had quite the round trip in the last few weeks. But when we look at our corporate client or our consumer clients, sentiment is weaker, but spending is strong with the consumer still. It's holding up. Some of that is the pull forward of spending, the same from corporates ahead of tariffs. But we're keeping a very close eye on what will happen with unemployment, what's going to happen with inflation, obviously, what's going to happen with the actual tariffs. Will they be 10%? Will they be 25%? Will they be more? That uncertainty will get clarified. We will know more. We'll know more about the tax bill. We'll know more about deregulation. But it's going to take some time for the hard and soft data to converge and that we know which scenario we should be acting upon.
Well, to that end, you said earlier today on a panel that a lot of your clients are in this wait-and-see mode. So what is your advice? Bring us into the boardrooms.
Yeah.
What are they waiting to see, and what is your message?
So with clients, there's a couple of things that are going on. One more tactically, which is preparing for headwinds. And remember, we're serving multinational clients and multinational institutions and governments around the world. So they are strengthening balance sheets if they feel the need to, take advantage of that. They're pulling forward inventory. They're pausing some of their investment spend, CapEx. There's still activity, but there's definitely the wait and see and preparation. Then you have all the work that is going on where we're having heavy client engagement on how should I be rethinking about my supply chains? What should I be thinking about my hedging and financing? And then on the top level, what does it mean from the strategic advice? So the level of engagement everywhere around the world is absolutely tremendous. It's about scenarios right now. It will turn into action further down the year.
Now, you're the most global of U.S. banks, so you see what's happening on the ground in the Middle East, in Asia, in Europe, in Latin America. What do you think international investors feel about their relationship to the United States today? Are they concerned that our status as a reliable trading partner is going to stick around, given all the change?
There is an immediate reaction to the speed, the pace, the nature of the changes that have been announced. And that causes a certain amount of emotion from people. But when you step back and you look at the economic advantages of America that we felt so positive about in January are still there today. Labor mobility, the breadth and depth of our capital market, never bet against the American entrepreneur. Those still remain strong. What I do hear more from our international clients is they expect a more multipolar world to get accelerated. So they're starting to think through what are some of the other relationships they need to be developing, what are some of the challenges that they're going to be facing. But at the end of the day, a multipolar world is a win-win. It's not a zero-sum game. And I think folk are beginning to understand there are not as many alternatives to the US as the initial thought would be. And the second piece is there's also opportunity and there's a win-win out there.
So one place you're not seeing the win-win in particular, and you said this on your earnings call with investors actually, that your client base is not as affected, but smaller and mid-sized companies could get pummeled, is the word you use in this kind of environment. What kind of risk is there to Main Street if these trade negotiations aren't sorted out faster?
I think it's not just the trade. We want to see the trade, we want to see the tax bill, and what that will be, and then also deregulation, because as Secretary Besson has pointed out, deregulation has really impeded Main Street as well. We've seen it with Basel III. The concern as a large bank was around what does it mean for the consumer? What did it mean for farmers? What did it mean for small businesses? Because they have quite a trickle-down impact of too much regulation. So some of that undoing of things that have been overdone is very important for Main Street because they don't have the same flexibility and diversity of business model that the larger corporates do.
But don't they have nearer term problems like inflation that could be on the heels of a lot of these tariff talks and access to capital being different than those larger firms have?
Yeah, as I talked about, I do think the small businesses and those involved in sectors affected by the price increases, by the tariffs, by supply chain disruptions, just because of the magnitude of changes that could be coming, will have an impact on them. And that's I think where some of the disruption and the pain from this will be felt first. And we need to be very mindful of what are we going to do to help support them.
Very specifically also, you were recently in Mexico with Mexico's President Claudia Sheinbaum. How did that meeting go? What's her strategy to deal with the trade negotiations with the United States?
I do think that the Mexican presidency is doing a very, very good job. She's a very smart, thoughtful person. She's looking at stepping back, letting some of the noise die down. We're very clear on what are Mexico's priorities. The U.S. is very important to Mexico. She's very aware of that, but we'll also be looking at other places to put a few more eggs, so not all the eggs are in the Mexican basket, and strengthening relationships in South America and the like as well.
So, all in all, let's take a big step back to look at the macro environment that's being created in the wake of what's going on. A lot of people have a lot of concerns around inflation and a weakening economy at the same time. Do you agree with President Trump that the Fed should cut interest rates, or do you believe that it would be imprudent to do it at this time when inflation expectations are higher?
It's very hard for the Fed right now because of this disconnect between hard data and soft data. And the hard data holding up, well, the sentiment data is clearly impacted. And until there is more clarity, it will be hard to know. If it's a 10% tariff, easier to absorb. If it's 25% or higher, then that will have more material ramifications. So getting clarity on the trade deals and agreements that will come through. We'll know more about taxes in the summer. We're starting to see some of the benefits of deregulation occurring. All of this will play in. But right now, the Fed's in a tough spot.
Now, I want to turn to Citigroup specifically. You're in, let's say, the later stages now of a historic turnaround. You had a lot of work on your plate in the first couple of years. Next year is year 5. Now, this year, you have clearly made progress in getting closer to your return on tangible equity target of 10 to 11% by next year. Do you stand firm in that target, or are there risks to achieving it? Or do you believe that it could actually be hit sooner than you initially expected?
No, we stand firm with the target. I am very glad that we have the strategy in place and it's working, the good progress there. The organization we did last year has also played benefits, making us more agile. We have a fantastic management team. I'm really proud of the leaders that we have at the firm. And I'm also glad that that's all in place so that we can be in the front foot and leaning into the different challenges and opportunities that this environment means for our clients. And we can be that port in the storm. Strong capital, strong balance sheet, well reserved. So I am pretty determined as I look to the future that we will play the role that Citi should be and lean into this environment to be there for our clients.
I think when you look across Wall Street, one major concern is that given the deals environment has not played out as anyone has expected, the commitment, not just Citigroup, but many large banks have to keeping all of those bankers on force. How do you feel about this? Do you believe that there is a point this year that you would have to make reductions given what the environment looks like?
I think we have a diversified business model, so that's very helpful. We saw that in the first quarter, real strength across the street in the markets businesses that helped counter let's call it a tepid environment in the IPO, some of the leveraged finance market. So that those diversified business models are very helpful. For us, I do feel the environment does play to Citi's strengths. We are everywhere around the world, and all the clients are engaging us on what should they be thinking about doing on their supply chains. We're helping them in India, in Japan, in the Middle East, in Africa, and beginning to think through what changes do they need to be making and getting prepared for that. At the same time, the pipeline in deals is growing. It's been quite active. I'm surprised by how active it has been the last few weeks, but the pipeline has been growing pretty steadily. So clients will be ready to act once there is certainty. We don't know if it's a very bad economic environment, that would be more restructuring. If it's a good economic environment, it will be game on again.
Jeanne, one more question for you, because next year is year 5 in your tenure, and you could stay CEO for a long time. We know all of your rivals certainly have, but you've also added a lot of significant senior talent around you. How is Citigroup thinking about succession planning at this point in time?
First of all, we're really proud of the bench of talent that we have, both from within the firm and some of the people that we have brought to the firm. And we're a team that is focused on delivering the strategy that we put in place. We see such huge potential, and we can feel the momentum behind us. We can feel the clients wanting us to succeed. And that's what we're focused on right now. And I am looking forward to being CEO for a long time.
Jeanne, we thank you so much for joining us here on set. We're looking forward to seeing how the year plays out for you. Of course, that is Jeanne Fraser, the CEO of Citigroup. David, back to you.
Shonali, thank you very much. Very newsy interview there as the CEO spoke about this movement toward a multipolar world in her recent trip to Mexico, talked about the challenges facing the bank as well. Let's check in here on this Monday afternoon with Amy Morris for Bloomberg Business Flash. Amy?
All right, thank you, David. The air traffic controllers at Newark Liberty International Airport lost radar and radio communication for more than a minute on April 28th. That caused flight delays and cancellations. The incident was caused by a tech failure at the FAA operation in Philly, which guides flights into and out of Newark. It's experienced multiple failures. The FAA is facing a staffing crunch and aging infrastructure. Rite Aid intends to file bankruptcy less than a year after completing an earlier restructuring. A Chapter 11 filing would mark Rite Aid's second bankruptcy in less than 3 years, following its first filing in October of 2023. The S&P 500 halted its longest advance in about 20 years after President Trump's latest tariff remarks, despite data that show a pickup in growth at U.S. service providers. The Institute for Supply Management reports its service industries index rebounded in April, led by orders, but a measure of inflation tied to the report hit a more than 2-year high as the U.S. imposed tariffs. And we do check markets for you all day long here at Bloomberg. The S&P 500 is down 0.2%. NASDAQ down about 0.25%. The Dow is about 0.25% higher. 10-year Treasury yield at 4.36%. The 2-year yield at 3.84%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Balance of Power with David Gura.
Amy, thank you very much for that update. And as you can see on your screen there, the President of the United States is at a lectern in the Oval Office alongside Roger Goodell, the Commissioner of the National Football League, and the Mayor of this city of Washington, D.C., Muriel Bowser, and they're confirming news first reported by Axios this morning that the 2027 NFL Draft is going to take place in Washington, D.C. It's going to take place on the National Mall, and the President now expounding on any number of other issues, talking about a post he put on Truth Social earlier today indicating that the film industry needs to be protected because of a national security threat. He says he wants to put a 100% tariff on foreign productions. More detail on that as he continues to speak. You can follow that on Live Go on the Bloomberg terminal. The President saying the film industry has abandoned, his words, the U.S. I'm David Gura, filling in for Joe Matthew and Kaylee Lyons on this Monday afternoon. Our coverage continues here on Bloomberg Television and Bloomberg Radio at Bloomberg.com and on the terminal.